This is Investing Ideas by ValueInvestAsia.com.
Hi, this is Stanley from Value Invest Asia. This week we have a very special guest. His name is MJ. He is a research analyst for Equities Tracker Holding Berhad, which is a listed company on Bursa Malaysia. So Equities Tracker Holdings, they are mainly in the investment educational business, and MJ has been a researcher for them for quite a while, mainly focusing on stocks on the Bursa Malaysia market. I have known MJ for quite a while, and MJ has always talked about very interesting companies and ideas within the Malaysian market. And this time around, I am very privileged to chat with him, where he introduced one of a very unique company called Elsoft Research Berhad, which happens to manufacture machines to do testing for LED lightings. So I have a great chat with him, and I think that you'll find his idea and his thoughts on investing very unique and interesting as well. So here we go.
From ValueInvestAsia.com, this is Investing Ideas, where we talk to investors from all walks of life, learn from them, and find out some of their favorite investment ideas.
Hello, MJ. How are you?
Hi, Stanley. Absolute pleasure to be on the podcast.
Hey, very good. Thank you very much for accepting our invitation. So maybe before we even begin, why don't you share a little bit about yourself? How long have you actually been with Equities Tracker, and how long have you been investing?
Yeah, so I've been investing for about 4 years now. And I am currently the research analyst for Equities Tracker for almost 2.5 years as of today.
Cool. And then what does Equities Tracker actually do?
So in a nutshell, basically we help people invest better, full stop. And we help them invest better in two ways. Early on, Stanley, you mentioned that we are in investor education. So education is one way, and the other way we do it is through technology. So we try to merge the two and basically make people's life easy when it comes to investing in stocks.
Cool. Okay. And about yourself, how would you describe yourself as an investor? What's your investment style?
So if I can be totally honest, even though I've been investing for 4 years, I think, we always learn that in investing, we need to invest for a long time, right? 40, 50, even 60 years, depending on how old you live until. So when you look at it from that perspective, 4 years really is very, very small. And because of that, I can say that I've not really developed a very strong philosophy. I'm still in a way open to a lot of different kind of strategies, but only in relation to value investing.
Right.
And I would just like to add that because most of my personal investments, I manage funds for my family as well, are mainly situated in Malaysia. And one of the good or bad things, depending on how you look at it, about Malaysia is that because we only have about 900 companies, 900 plus, so the opportunity set is a bit small. But then small can mean niche, right?
Okay.
So why am I telling you this? Well, the reason is quite clear, is that you cannot have a very, very specific strategy and say, I want to invest. You cannot say, I only want to invest in 2 sectors, or I only want to do deep value investing, or I only want to do growth investing. And so the bad part is that there's this limitation. But the good part is that you are forced to actually entertain all different kind of investment strategies.
Right.
So the way I would say it is, more opportunistic.
Right. To be more flexible.
Correct, because growth stocks, for example, growth investing is definitely viable. We have a few of that, but we cannot be totally growth stocks because valuations might get too high for all. This isn't to say that all growth stocks with high valuations are bad. It just means that if you only do high growth stocks investing, then you're limiting yourself to a tiny opportunity set. So then at the same time, you cannot do the old school sort of statistical Graham style investing, because quite frankly, there are not a lot of companies trading under 2/3 of working capital in Malaysia right now. And even if you find them, you begin to wonder whether or not they're actually good companies. And then when you try and sift through everything, really you are left with one to two. So I mean, I can go on and on about my philosophy, but I think the key thing is that we are opportunistic. If
Yep.
it's time to invest in the boring elephant type investment grade companies, I'll do that. If it's time to go up growth, I'll do that. And if it's deep value, that's the way, I'll do that. Or if it's a mixture of all three,
Yep. Okay. So yeah, that sounds reasonable, but I think you're a bit too humble. Because every time you share your ideas with me, I find them very very fascinating, and I certainly think that your investment at least strategy is doing very well for you. And your
Well,
family.
that's only because I watch your stuff. So
Thank you, thank you.
yeah.
Okay. Without further ado, I think the main gist of our podcast, of course, investing
Of
ideas,
course.
is to look into some of the ideas that you are currently looking at, and
So,
you basically is pitching to me one very interesting company which I do not know a lot about. Why don't you introduce that to our audience, and why do you like it?
all right. Before I go on introducing, I just want to make it very clear to your listeners that uh, the what I'm about to share represents my personal view,
Of course.
not my company Equity Tracker. Just want to be clear. All
Yep.
right.
Okay. Yeah, certainly. Totally
Okay.
understand. Yep.
So the company that I'd like to introduce to you is actually Elsoft Research Berhad, listed on Bursa Malaysia.
Okay.
Some basic stats, it has, as of the 13th of September, 610.7 million market cap.
Okay.
It is a company that has been growing in terms of revenue, profit, and even the cash flows, whether operating or free. But what really is fascinating about Elsoft to me is that they've grown a lot of this with close to no liabilities. I mean, they have no short-term debt at all to speak of, and there are only some long-term liabilities. And fun fact for your listeners, it is actually the highest margin stock in Bursa Malaysia. What I mean by that is that their
Wow.
profit margins
Uh-huh.
are the highest in the whole of Bursa Malaysia. So that's
Really?
yes,
Really?
yes.
You found the most profitable business on Bursa Malaysia.
Yes, but I like to clarify that this is data based on financial year 2018.
Okay.
Because of the trade war and things like that,
Uh-huh.
it might look slightly different this year, but
Right.
nevertheless, I'll show you later on what a bad year looks like in
Okay.
terms of profit margin for this company.
But what do they do actually, this company?
Okay, so look, the technical answer to this question is that they build what we call automated test equipment, automated test equipment, total test solutions. That's
Okay.
tester plus automation. That's the
Okay.
boring version. But to really simplify it, basically, they develop tools or machines or testers, more specifically, to test mostly LED products for their defects and functionality. And to be more specific, their functionality means the voltage and the temperature. So
Right.
now,
So
I think
like LEDs, lamp, light bulbs.
yeah,
right.
that's one thing they do.
Okay.
Yes,
Mm-hmm.
essentially they have roughly four actually end products that they test, right? Three actually, sorry, and then plus one. I'll explain the plus one later. So the first one will be your smart devices. For example, take for example the iPhone. I'm not saying that they supply to iPhones. I'm just saying that, for example,
Right.
those flash you have on your phone.
Okay.
So those LEDs, that's what they do to test, right? So you can imagine that they in order for the flash to function on the iPhone, it needs to go through a series of testing.
Okay.
And so they build the machine, they use their intellectual property to manufacture it and then sell it to whoever who wants to test the equipment.
Right. Okay.
So that's the first one, and it is the largest segment. It's about 59% of revenue
Okay.
right now for smart devices, followed by automotive. So automotive rather. So things like your day running lights, your front lamps, tail lamps. They also test those equipments.
Okay.
And then, so roughly they're about, they were 49% in 2016, 41% in terms of revenue breakdown. In 2017, 41%, 2018, it dropped to a bit to 27%.
Okay.
So that's the second largest segment, then followed by what we call general LED lighting, so like your lamps, etc.,
Okay.
light bulbs.
Does that include LED screens?
Uh, I'm not too sure, but from my understanding is that that is a possibility. That's what they do because, it's probably correct because they test LED lights in general.
Right. Okay.
So because the different types of general lighting, right? It's so broad, you see. So I'm surprised with this.
Okay. Okay.
And actually, last but not least, they are embarking on a new sort of new product, what they call embedded controls, which we will get into a little bit more later on.
Okay, you talk about their business, right? But what makes you interested in this company?
Okay, so let's say you are new to investing and you really wanted to find out whether or not, a quick fire way, to figure out whether the company has a moat, right? Certainly, you talk a lot about moats in your videos and all, and the importance of having a moat. Now, the truth is, to understand the moat requires quite a little bit of homework, but there's a shortcut way to find out whether or not, a good chance whether or not they're a moat, and that is to actually figure out what their margins are. Now, long to short, margin is basically what's left over after all the expenses have been paid out,
Yep.
right? Very simple. Now, just to compare Elsoft and their three other competitors, MMSV, Teradyne, and Chroma ATE, right? Their pre-tax margins, which is basically what is left over before they pay taxes, is about Elsoft is 2014 46%, 2015 53%, 2016 49%. 2017 45%, and 2018 52%. So just to explain very simply, right? For every dollar of revenue they get, they keep nearly, on average 50%.
Wow.
Right? Now,
That's fantastic.
just to compare, right? Why I believe that they have a moat. Even let's say I totally knew nothing about moats. I don't know about things like switching costs and government regulations and all that difficult stuff. Their next closest competitor is MMSV. So from 2014 to 2018, it's 26%, 26%, 27%, 28%, and then down to about 21%. So their closest competitors have half their margins.
Right.
Now, then you look at international companies like Chroma, from Taiwan, 15%, 15%, 8%, 21%, 20%. Teradyne based in the US, 6%. 15%, -3%, and then I think it's 25%, 22%. So they are quite frankly head and shoulders above the others.
Okay. But
Now,
why do you think that's the case?
Okay. So the truth is there are actually many reasons why, but the largest reason is actually simply intellectual property.
Okay.
In fact, we spoke to the management of Elsoft. Well, I didn't, but other members in my research team did. And obviously, I wouldn't share like all the technicalities, but basically, they're a lot faster and they're a lot more proactive when it comes to the designs of their machines and the efficiency. So that gives them an edge, right? Because what you're doing is you're actually doing a cost saving for your clients.
Okay.
Right? When you can do things faster. And not only that, you can do things faster, but your competitors cannot copy you.
Oh.
Because either they don't know or you're protected by patents.
Okay.
So that's the intellectual property. Quite frankly, I'm not an engineer, so I'm definitely not qualified to explain exactly what that intellectual property is. But trust me, in fact, we do study other companies with similar levels of margins. What pops up very clearly in our mind, in our own findings, is that intellectual property is by far the number one factor in determining the margins of a company.
Right. Okay. Okay. And how are they actually growing nowadays?
So as I mentioned earlier on, they are actually in LED, right?
Mm-hmm.
And I think to understand why I think it's not what I think actually it's the facts is
Mm-hmm.
that why are LEDs growing, right?
Mm-hmm.
Quite simply, they are the most energy what you call that cost saving
Mm-hmm.
things out there when you compare to things like fluorescent lamps and all that. And they can actually reduce energy usage by 75% when it comes to lights.
Mm-hmm.
So it's like there's virtually no comparison, right? Now, a little bit of history. Basically, in 2010, LED really came to the fore, meaning that they really started adoption. Now, from 2010, the adoption, according to Statista, for all products was 0.3%. So
Mm-hmm.
all the lights that you see, whether it's automotive, general, or smartphones, used to be non-LED.
Right.
It's
Okay.
0.3% in 2010.
Okay.
In 2020 next year, it will be 61%.
Okay. Okay. So just
So
more and more adaptation into LED lah for future devices, right?
yes, absolutely. And what's interesting is that this new technology, and by the way, the person who discovered white LEDs, we call it,
Mm-hmm.
actually won a Nobel Prize for it in 2014.
Right.
Just cool facts, right?
Mm-hmm.
Mr. Shuji Nakamura.
Uh-huh.
And what happened was that, uh, or rather, what's startling to me is not so much um, the growth, but how fast it is for a new technology. Usually, like the internet, new technologies like the internet or the car or the airplane, usually takes a while, maybe a decade or two before it starts to gain traction, right?
Mm-hmm.
You're seeing this with blockchain now, especially.
Yep.
But this study took off really fast, and yeah, that's where the growth is coming from. So just some stats, right? So that's the past, right? So what can you look for the future? Well, in terms of the entire LED market, right? Based on our research, right? It will be expected to grow at about 14% over the next 5 years over the next 4 years until 2023. And the entire total addressable market, which is to say, how big the market can be, is roughly about 105 billion US dollars. So that's what you're looking at.
Okay.
Yeah.
But having said that, that's the LED market and not the LED testing market, right?
Yes, correct.
Okay.
Okay, I get your point. But of course, you see, if there are more LEDs,
Mm-hmm.
then the demand for more testers in terms of capacity will have to increase.
Yeah, fair enough. Okay.
Yeah, because
Understand.
there's wear and tear, capacity issues, things like that. So
Okay. For these kind of companies, which okay, they do a few sectors, right? Like you said, which one are you actually more optimistic about?
okay, so I would say it would be the automotive. Now, why? Is
Mm-hmm.
because in 2012, yes, about 2012, the EU actually mandated that every single car in Europe
Hmm.
will have to have what we call day running lights in terms of your front lights.
Okay.
Now, long story short, it just means that if you're not using an LED, uh, uh, if your car does not have LED lights for their front lights, it's illegal.
Oh. Okay.
Yeah, it's actually illegal, right? And part of the reason is because Europe is, in terms of global warming, the most the fastest, right? They're the most concerned
Mm-hmm.
about global warming. So because LED reduces energy usage
Right.
and
Okay.
therefore carbon emissions, 75%. So that's why they are right there. And in the US
Hmm.
as well, the trucks are already mandated to have day running lights.
I
So
see.
what happens there eventually will also happen in Asia lah. So this is
Okay.
a global thing. Yes, that would be that. That's what I would think that is the fastest growing of all lah.
Oh, interesting, interesting. And if that's the case, for a company that is with so much potential, um, do you have a stats like how much market share they really have? Because with a market cap of only 600 plus ringgit, It's actually quite a small company.
It is.
right?
It is. I don't have stats for that because it's actually quite difficult. As you can imagine, for companies with a lot of intellectual property, being private and confidential is very important. So they're not. I mean, we can reverse engineer the numbers, but really we can only guess like how big it's. But I don't think they are big. The second thing I would point out is that it's not so much. Here, market share to me is not the most important thing. The most important thing is that margins are long to short lah. Yeah.
Okay. And talking about margins, you're right. They could have something spectacular in terms of IP that is giving them such a high margin. But
Yep.
in terms of the risk side, what kind of possible risks are you thinking about? Because from just
Yes.
looking at it, right? To me, it could, yes, they are very good company, or maybe it could be a fraudulent company. Do you see that as a risk?
I don't think so. I think that because so they don't play around with their accounting so much based on what I've seen in the past 10 years. So I wouldn't say that they are fraudulent. Look, at the end of the day, we can never know. But to me, it's more important that investors understand the business model, because why would someone or a business owner commit fraud? The reason he will commit fraud is because he believes he can make more money being a fraud rather than actually running the business. This gentleman has been around for a long time, and revenues actually fell very, very sharply from 2006 and 2008.
Right.
And he stuck the course, right?
Okay.
Nothing changed, and he was there through the hard times, and now he's doing pretty well in the good times. So
Right.
from
Okay.
that, but to your original question, which is risk, now, yes, it's definitely true that there's risk. The first one is actually LED saturation. Now, if just to repeat, right, as of next year, it will be 60% saturation.
Yep.
So in 10 years, it went from 0 to 60%. So and because it's compounding, so from 60 to close to 100%, let's call it 99, 98%, it's going to be a shorter time.
Right.
So as a result, the company is really relying on something that has a product life cycle of between 3 to 5 years. So that is definitely one reason. Of course, to intellectual property knockoffs from our big neighbors in Asia, that's definitely a possibility lah. So because in certain countries, intellectual properties don't really matter. So for sure that there's risk like that.
Okay.
Now, but I just want to preface by saying that, let's say even if adoption does happen, full adoption, right? 100%, right? It's not possible, but let's say it's 100%
Okay.
adoption. What happens is that, yes, it's true, the growth will not be there anymore, or rather, the growth won't be as fast anymore, because those existing LED products will need to be replaced, correct?
Right. Yes.
So when they are replaced by newer, more high-tech products, maybe recently that the iPhone has now 3 cameras. So as you can imagine, the camera lens makers will have to make more, will have to produce more. It's a boom for them. LED is no different. As more LEDs get into cars, get into houses, to keep replacing them, it means that there will always be a demand for testing for LEDs, and therefore there will be demand for LED testing. The key thing to understand is that the times are not going to be as good. Yeah, that's one of the risks. The way to look at their product life cycle.
Okay. And you mentioned also, about the trade war of the tariff between US and China is having an impact on this company. Why would that be the case?
So the truth is that the trade war is quite a complex thing, right? Because it's complex because political leaders, especially across the Pacific from here, can be quite erratic. And so that is one element of complexity. But another element of complexity is actually supply chains. So right now it's very hard to discern as to why the trade war is causing a bit of like a confidence crisis. Right? Is it because it's truly economic reasons, or is it because it's a confidence or psychological issue, which will be improved, of course, once volatility returns back to normal and things become more stable. So I don't know, is it psychological, economic? I'm not too sure.
Okay. So in terms of like maybe some of their customers are holding on to orders and not ordering so much, that could potentially impact their business lah, because they still need their customers to build more LEDs in order for them to have more orders for the testing machine, right? Okay, that's interesting. And I've been just looking at the stock chart. It has been quite hammered due to
down 37% since September 2018. Actually, this is quite mild already, in terms of
really.
It's one of the.
Okay, then let's talk valuation. Right? Do you find this attractive right now? And how do you look at the valuation?
Okay. Yes. So. One of the things that I actually learned from you is that really, valuation is like this very arcane, it's like something out of Harry Potter.
Okay.
Right? But really, I think what you have done that has helped me also is that you've managed to really simplify it into 3 boxes. The first one, it will be, I can't remember your exact words, but it's basically a multiple base, so a PE or price to cash flow or price to something, right? It's just a multiple figures, a ratio.
Yep.
And then there's asset valuation, where you look at the balance sheet and the cash and the debt, etc., etc. And then the last one will be the net present value or the discounted cash flow model, right? So what I realized also is that you can actually co-mingle more than one of the valuation techniques.
Okay.
Meaning you can use a multiple, and in this case, you can combine a multiple base and asset valuation base.
Okay.
So when you do that, basically when you buy a company, you're also buying the cash and the debt of the company, right? You're buying the property, plant, and equipment and all that. Or at least that should be the mentality going into the stock market. It's like you're buying the whole business.
Okay.
You are buying the assets of the company, and you're also buying the cash flows of the company. So when you combine that and you add the fact that it has a relatively high dividend payout and yield, so the payout, just for your information, is roughly where is the payout? Okay, payout is between, it was 63% in 2014. In 2018, it was 77%.
Okay.
So
they pay out most of their cash.
Can you imagine? It has such high margins already, and then they pay out so much dividends, right? That's why it's no surprise that their dividend yield is about 4.7%.
Nice. Okay.
Right, it's last year's figures lah. So when you take that into account, you're looking at buying something at 11 times earnings, which should give you roughly 9.1% returns going forward. So when you're buying this stock, you are expecting a 9.1% return. Now that might not be interesting to your viewers.
No, wait, why? Let's run through that.
Yes.
How do you come up with that expectation that you can expect a 9.1% return from this stock? What's your thinking behind
Okay, very good. So I've always followed the principle that fundamentals will determine future stock prices.
Okay.
If fundamentals don't determine future stock prices, then value investing is dead. So the fundamentals in this case will be the operating cash flow that the company is generating.
Okay.
And in this case, you're looking at 11 times operating cash flow multiple. And if you invert that, it will become a 9.1% return. And so
Right,
going
okay.
forward, buy it today, it will be 9%. Because it's the yield you're getting, right?
Okay, you're talking
So,
about the cash flow yield. Okay.
yes, the cash flow. Well, okay, it's not exactly the cash flow yield, it's a cash flow yield plus the asset valuation. So basically, I take the market cap and then I net off whatever cash and debt it has.
Okay.
And then I use that as the new, let's call it the new market cap. And then I plug in operating cash flow inside.
Right.
It gets to about 9%.
After
Now
cash.
that might be, yes, correct. After it's the fancy Wall Street term is cash adjusted price. No, that adjusted price. Yes,
Okay.
it's very similar to enterprise value. If your listeners understand, but I don't want to get into that. It's a bit technical.
Yep, sure, no problem. Okay.
Now, so 9.1% return might satisfy some people because the Bursa Malaysia's price to earnings ratio right now is roughly 16 to 18. So you're looking at a 6%, maybe 7% return going forward. So a 9% will represent, beating the market, right? So, but that might excite some people, that might not excite some people. Now, if you're looking for double-digit returns and if you want to, now this is my personal opinion, but if you want to get double-digit returns on this stock, you have to take advantage of the high dividend payout and dividend yield. When you receive those dividends, if you reinvest those dividends into the same stock, then you can actually boost your returns from 9% to between 10 to 13% by my own personal calculation.
Okay.
Yeah.
So if you reinvest it and assuming that they continue to grow and produce that kind of yield.
Yes, if you don't use the dividends to buy iPhones and all that, yes, then you can there's a good chance you can do that. Now, of course, this is more like an absolute kind of valuation. But when I compare it to peers and those four same peers, right? So Elsoft is about 11 times earnings, as I mentioned. MMSV is about 14.
Okay.
Teradyne is 15 and Chroma is 37. So on an absolute basis, there is a good chance that you can beat the market with this stock. But on a relative basis as well, compared to its peers, it is quite attractive. But of course, that all assumes that the management, that's the same thing that they've always been doing. I have very high respect for the management. But of course, they might do the wrong thing, or they might have succession problems or whatever. So that's a risk.
Okay, wow, that's very, very fascinating. Looking at their margin and the things that they do, it really reminds me of this company Vitrox as well.
Yes,
also,
actually, if you understand Vitrox well, you understand Elsoft well, because
yeah, quite similar. Okay, thank you so much, MJ, for this wonderful explanation and thesis.
It's my pleasure as well.
On Elsoft Research Berhad. If you guys want to check out more about MJ or Equities Tracker, you can find them on Facebook and just search Equities Tracker. You should be able to follow some of their own research and also what they have been up to. It has been a pleasure talking to you, MJ. Thank you so much.
It's my pleasure as well, Stanley.
Yeah, see you soon.
See you.
Thank you for listening. You can subscribe to our show on Apple Podcast, Google Podcast, Spotify, or wherever you get your podcast. If you are feeling generous, please give us a rating and review as well. This would greatly help other investors find out about our podcast. To access our show notes, please go to valueinvestasia.com/investing ideas and be sure to sign up for our email newsletter for more outstanding content and reports about investing. The show is for entertainment purposes only and should not be taken as investment advice. Please seek professional advice or do your own research when making any investment decision.